You work hard to make money and save money. But are you putting it in a normal bank where the bank basically gives you nothing? Or are you putting it in one of those infinite banks where you're earning like 12% on your money? My name is Kris Krohn, and I teach some of the best wealth building hacks and strategies out there. I'm known for business, I've known for real estate, but today we're talking about a special kind of bank account that I've been using for the last 15 years. And yes, this bank account I'm talking about averages around 12% a year on your money. It's not gonna get you crazy rich, but it's better than using a normal bank. Check it out. All right, so we're talking about infinite banking, and if you've never heard this phrase before, let me break it down. It uses the cash value of a life insurance policy, kind of like a personal bank, and it allows the policyholder to borrow and basically repay funds. Okay, wait, Kris, are you saying that people are using a rare type of life insurance policy like a bank, and it's paying you an average of 12%, and then you can still borrow money out of it like a bank and then pay it back? Is that what you're saying? That's exactly what today's video is about. And because we're talking about life insurance, people get a little skeptical because they're like, okay, life insurance, I remember when I sat down with my guy and he broke it down for me, and I felt dumber when he walked away because it was just really complicated. And I get it. It can be really expensive if it's not put together the right way, and it can certainly be complicated. Today, I'm going to break it down. I'm going to make it super simple because we're putting infinite banking on trial to first of all figure out, is it legitimate? And then if it is, how do you do it the right way so that your hard-earned savings can make you all that extra cash? First of all, is someone going to jail? Are they getting the handcuffs? Are they going to be wearing an orange jumper? Infinite banking, introduced by R. Nelson Nash, is a recognized financial strategy that leverages the cash value of a life insurance policy as a personal banking system. This method has over 2 decades of success backing it up, and there are significant reasons that you should look at maximizing the strategy. And we also need to draw attention to the fact that life insurance is a highly and strictly regulated product by state and by federal agencies. So the information in today's video is really important, first and foremost, for you to understand that this is a regulated industry. It is 100% legitimate, and these regulations are designed to ensure that insurance companies operate under stringent legal standards and are required to maintain reserve funds to guarantee that they can meet their policy obligations. Let's just back up for a moment and talk about the difference between banks and life insurance companies. First of all, you realize that when you put your money in a bank, they're going to say, oh, you're going to put that in a savings account. We'll give you standard like 0.1 or 0.2%. This is how it normally goes. But you see, when you deposit your $10,000 in the bank, it's no longer $10,000. Banks can go to the Federal Reserve and they can now do what's called fractional lending, where they'll be given permission to say, let's just pretend that you have 10 times or even 100 times the money. Well, look at this. They're giving you 0.1%, and then they lend your money out to someone who wants to borrow for a car or a house at 6 or 7%. They're making 7% of money that they're giving you 0.1% of. So they're making 60 to 70 times the money. And just think about that for a little bit. Like, banks are in a really, really great business. But insurance works different, because what the insurance company is doing is they're basically saying, you're gonna die. And we have data, actuaries, where we basically know roughly how long we think you're gonna live. And so when you get your life insurance set up, we're basically going to charge you an amount of money so that when you die, we can fund the whole value of the policy. But you know that the life insurance company has to charge you more than they're gonna pay out. And so imagine for just a moment that they're charging you more, which is okay, but then they're doing it for like hundreds of thousands or millions of people. That insurance company is literally gonna be rolling in the dough like a baker's knuckles. They're gonna be making millions of dollars, which means that they can play some interesting games like we're talking about today. You see, this infinite banking life insurance game that we're about to play is because the insurance companies have this leftover money. And we want to see if we can put a policy together, kind of like a bank account, where we can get some money out of it and start getting some of that benefit. And I would go so far as to say that insurance companies are more successful than banks at making money because of the industry that they're in. And as a result, they have more to share. How much more? Well, there's a way for you on average to make, like I'm claiming, 12% on your money while it's just more or less sitting in the insurance bank account. That is worth paying attention to. It pays to pay attention. Now, this 12% I'm talking about obviously are the dividends. Like, if you put money in, then this type of life insurance policy will pay dividends back out to you. Many whole life insurance policies issued by insurance companies pay dividends to their policyholders, enhancing the cash value. And they can either leave it in the policy and grow it, or they can divvy it out to you. These dividends can be used to just cash out, or they can be used as loans against money that you want to borrow, or it can be used to purchase additional paid-up additions. My favorite is to use life insurance dividends to actually buy more real estate, because now I'm I'm earning 12% on my policy on average, and if I'm also earning 60% in my real estate, 12 plus 60%, I'm freaking killing it right now, which is really why I'm a fan of what we're talking about today. Now, do all life insurance policies pay an average of 12%? No, they don't. You would want to click the link below and basically put in your information to talk to a member of MPI, because they'll do a free consultation with you and show you how they can help you grow your money exponentially more than traditional life insurance policies. In fact, if you're watching this and you're like, well, I have a life insurance policy, you should especially click the link below, because my friend that worked with this particular life insurance company built a product I've never seen before that is paying out more aggressive than any other product I've ever seen before, which means that it might be a good time to redo your life insurance policy and get even more benefits. Now, obviously we're talking about life insurance and we're not talking about term life insurance, right? Term, you're just paying a little bit every month for the event that you die. We're talking about a policy where beyond the cost of insurance, you're putting more money in because the insurance company has the capability of growing it in such a manner that they can share an average of 12% back with you. On a high year, as much as 20%, and on a low year, as little as 0%, averaging 12%. What that means is every month that you're paying into a policy like you would a 401k or IRA to get, you're putting it into this life insurance policy and you're getting way more benefits, in my opinion, than a 401k or IRA, because you have much greater dividends. But as you do that, you're also building up something called cash value. In other words, in my personal life, when I have extra money, I put it like I would in a bank, I put it in life insurance more aggressively than just the cost of the insurance. And what happens is that value builds up higher and higher and higher. And over time, I have the ability to borrow it, buy real estate, earn money in my policy and outside of my policy. And then sometimes I even pull money out of my real estate to go buy more real estate. So my original dollar is now invested in my life insurance, my real estate, my other real estate, maybe a business, and on and on and on. And that's called the velocity of money. Here's what you wouldn't want to do. Build up cash value, and instead of buying an asset that grows, you do something really dumb like you buy a boat, or you buy a car, or you buy something that is a liability that goes down in value. I'm not saying it would be the world's worst choice, because you're now financing that vehicle for a lot less money than a bank might charge you, but there are better choices that you can make. I think it's also important to mention that this type of bank account comes with benefits that, and I'm talking about the tax benefits. If you do something right, taxes are going to be your biggest enemy, right? Well, the growth of the cash value in your whole life insurance policy is tax deferred. And then the dividends that it earns are also not taxed. So imagine earning 12% on your money and not being taxed on it. It's huge. And when I pull the money out and I buy real estate, I don't get taxed on my real estate either with the strategies that I use. So another reason why I really like this rare and very specific type of life insurance is because of the tax benefits both in the policy and outside of the policy. Bottom line, infinite banking with life insurance is not a scam. It's definitely more advanced than most people will ever do. And the cool thing is it is free to set up. You don't have to pay a fee or a cost. You can literally get this type of life insurance bank account for free. And once you're saving $100 a month consistently or more, you definitely want to open up this type of bank account. You've got to be in it for the long haul and really understand the costs, the risks, the potential upsides and downsides. And if you click the link below, talk to a member of MPI, I believe that they are harnessing the most powerful policies on the planet right now with the biggest benefits. And especially for me as an investor, it's not just helping me build wealth, but it's also helping me build my real estate and business wealth as well. Click the link below, talk to a member of MPI for free, and let them break it down for you and show you how genius it could be in your life. Now let's assume for a moment that you've set up your bank account life insurance policy, you got money accumulating, or maybe you took some money from a 401k or IRA and you just dumped it in to start it off faster. Well, how do you then learn how to put that into real estate? There are 4 criteria that I use when buying real estate for producing those high ROIs like I was talking about before. If you want to not only crush it in life insurance with the link below, but you want to crush it in real estate, click right over here, watch this video, let me show you.